Forget all those bulky candlesticks you have heard and meant to keep in your head because they are all trash. In this video, you're going to know the 5 types of candlesticks you really need. But before getting into this discussion, let's me use a second to introduce myself. In case y'all don't know me, I'm Divinee, also known as CryptoBoy Pat on YouTube. I'm a cryptocurrency investor and a currency day trader. In this video, I will be telling you the main 5 candlesticks you need to learn as a trader and what it really means or does, so when you see or identify these candlesticks, you'd know what to do next. This video is also broken well down for beginners. So if you're a beginner that want to get into trading, this video is also for you. So for beginners, let's talk about the candles on trading. Firstly, we have 2 types of candles in trading, which are 1. Bullish candle. 2. Bearish candle. As you guys already know, the bullish candle is the green candlestick and the bearish is the red candle. The wick, shadow labeled on this image shows the length in which the price has gone and then returned back. That is to say, in the time frame in which the bullish candle is formed, the price went as high as reaching at this top, then it came down and remained here, which is the body. Same thing goes for the bearish candle. That is to say, in the time frame in which the bearish candle was formed, the price went low reaching the bottom, before buyers bought in the time frame and candle closed at the body. The body represent the strength of the candle. As we go further into this video, you will completely know why the strength and body of a candlestick is important. But before that, please note that the bullish candle opens from the bottom and closes at the top, while the bearish candle opens at the top and closes at the bottom. Without further more talking, let's get into the 5 main types of candlestick we need as a trader. 1. We have engulfing candlesticks. Like I said previously, I would be talking about the importance of the body and strength in a candlestick. An engulfing candle is a candle which is 3 times bigger than its previous opposite candle, which simplify that the 3 times bigger candle, either it's bullish or bearish candle, or in control at that point. If you're still finding it hard to understand engulfing, just look up the meaning in a dictionary. Like the Oxford Dictionary, it means to surround or cover something completely. Which means when you see a candlestick like this, you can anticipate that the price might go up because of the bullish, which also means the buyers are in control, and the bearish, which means that the sellers are in control. Just something like these images. The image shows the bullish engulfing, and as you can see, some of the prices went up. This other image shows the bearish engulfing, and as you can see, some of the prices went down. Please note that these candlesticks are not just used without an edge. You can't just see a bearish engulfing in a random place on your chart and place your entry. Please do not do it, because you're most likely to get liquidated and stopped out of the trade. You only use this as a confluence in your strategy's point of interest to know the confirmation of the trend. 2. The second candlestick on the list is the Doji candlestick. Doji candle is a candle which has a long wick and a tiny body at the middle of the wick, which shows no direction in the chart. This candle is also known as an indecision candle, as it shows little or no direction in the market. So when you are seeing a Doji candle, you have to just stay off if it's at your point of interest, or wait for more confirmations. But there are 2 types of Doji candle you need to put into consideration, which are Dragonfly Doji and the Gravestone Doji. The Dragonfly Doji has a long wick to the down while a tiny body to the up. This shows a bullish signal. So when you see this, at your demand point of interest, you need to put it into consideration. Same thing goes for Gravestone Doji. The Gravestone Doji has a long wick to the up and a tiny body to the down. When you see this candle at your supply point of interest, you need to put it into consideration as your confirmation, then you can place your trade, just like these images right here. You can see after the Dragonfly Doji was formed, the next candle which follows it was a bullish candlestick, and after the Gravestone Doji was formed, the next candle that follows it was a bearish candle. Again, please do not place your trades on any Gravestone or Dragonfly Doji you see in the market so as not to be liquidated. 3. The third candlestick on this list is called the Morning Star and the Evening Star. This candle, unlike all these candlesticks mentioned, consists of 3 candles, which are 1. A big candle, 2. A small neutral candle, and 3. A big opposite candle like an engulfing. This is a candlestick which shows the reversal of a coin, which is the rally base drop and drop base rally, which you can use to also mark as your demand and supply zone. The morning star means bullish reversal, in which the market was going down but all of a sudden, the buyers came and reversed the market, as it is shown in this image. While the evening star is a bearish reversal, which means that the bullish buyers were in control, but unfortunately the sellers came into the market with full force and reversed the trend of the market. With this image shown on the screen, you can see that the market was going down, but as soon as the morning star doji formed, the market started going the opposite direction, and this also happened with the evening star in this image. 4. Pin bars. Pin bars is the most important candlestick you need to know as a beginner in trading. If you think I'm lying, then ask anybody who is into trading long enough, and I'm so sure they will say the same thing. Pin bars serves as confirmation in trading. It is also a reversal candlestick just like the morning star and evening star, but the difference is just that pin bars has only one candle and morning star has 3 candlesticks together. Pin bars are known for their long wick and small body. It's just like the gravestone and dragonfly doji, but pin bar doesn't have tiny bodies. Bullish pin bar is a bearish rejection, meaning that the price is refusing to go more down as buyers comes in with full force into the market. Same thing goes to the bearish pin bar. It is a bullish rejection candle, which means that the price is refusing to go more up as sellers comes in with full force to sell the currency. With this image above, you can see that after a bullish pin bar, the price went up, and you can also see that after a bearish pin bar the price went down. Again, please do not trade just because you saw a pin bar in your chart. Pin bars are used for confirmations. 5. The last candlestick on our list is the inside bar. This inside bar consists of 2 candlesticks. A mother candle which is big, and then a small candle which is engulfed by the mother candle. Unlike the pin bars, morning star and evening star, inside bar candlesticks are not that important because they are not a reversal candlestick pattern. They are used to trade continuations like the rally base rally and the drop base drop, which isn't that strong in the market, but it can be used if you're a continuation trend trader. The bearish inside bar has a big red mother candle, and after that, a small bullish appears. This is used to trade continuations of the bearish candle. And a bullish inside bar candle consists of big green mother candle, and after that, a small bearish candle appears. This is used to trade bullish continuations. I know you do not understand what I meant here. That is why you need to subscribe to my channel so I can teach you everything you need to know about candlesticks, and the strategy which I imply that makes me good amount of money. This will be the end of the video. If you love this video, kindly like, share, subscribe, and trade wisely. Thanks.